Good morning, welcome to the Phoenix Blue Morning Update on Friday the 8th of March. I'm Tom Colley and I'll talk to you about the markets this morning. Okay, non-farm payroll day again, potentially a bigger non-farm payroll than normal. We have a FOMC meeting and rate decision Tuesday, Wednesday next week. The NFP figures today will undoubtedly have a greater significance on that event than would normally be the case. So we can expect some real volatility today. You need to be thinking about your rules going into non-farm. If your rules are don't trade it, don't trade it. Make sure your stops are where they should be. Any orders or any pending orders are closed, and any live orders, stops are in the appropriate places, profits are taken as per your rules, because this could be a real big volatile one today. Okay then, over to the news yesterday to start with. We started the day very early yesterday. We had the CPI data in from China, which came in below forecast. We then had the big event of yesterday, which was the ECB minimum bid rate and press conference. As was anticipated, there was no change in the rate, which is held at 0. In the press conference, the mood was optimistic without being hawkish yet. So we did see a positive reaction from the euro. Some of the extreme language was removed from the statement, or when I say extreme languages, some of the potential actions to extreme events were taken from or damped down a little in the statement, but as expected, the net result was yes, things are moving in the right direction. CPI or inflation has been rising, but is predominantly caused by energy prices, particularly obviously crude oil, over the last 3 to 6 month period. So there are no comments in respect of tapering the existing and planned quantitative easing program. As of next month, the bond buying purchases will decrease down to what was announced, I believe, in December, which will be 60 billion euros a month rather than the current 80 billion. But at the time they announced that, they also extended the period to mitigate that. So the net result was some positive sentiment coming out of that meeting, but without there being anything definitive or anything unexpected. Going forward today, before non-farm, we've got manufacturing production on the pound, which will be an interesting data for the pound. We have a forecast, a negative forecast, that could purely be seasonal relative to the previous. This data should be, or certainly the UK government will hope that this data is strong. In principle it should be, because the pound is weak, and that should make exports very competitive, and that should be feeding into manufacturing production of said exports. Then 1:30 this afternoon, at the same time as we've got non-farm from the US, we've got the Canadian employment change and unemployment rate, which obviously are overlooked in the light of non-farm. And then we have non-farm itself. Now, the forecast is 200,000 for the actual employment change. That's lower than last month. We had 227. But a lot of expectation in this figure has come from this ADP non-farm employment change figure that came out on Wednesday of this week. The forecast for that figure was only 184k. It came in at a whopping 298. Now, there's nothing that links directly these two data sets, other than obviously they are measuring very similar things. Their criteria are different, and they're measured by different bodies. However, that is so significant that has led the markets to basically expect a significantly higher actual figure here than the forecast. So and that has fed into expectation for the Fed's rate rise on Wednesday of next week, which the futures markets have at 100% probability at this moment in time. Obviously, if we get a strong figure here, that's going to remain. It can't get any more than 100%. A word of caution from that: when Janet Yellen actually spoke last week, she said that there would likely be a need to raise the rate if employment and inflation stayed on the expected and current path. Now, obviously, this is the employment element, but there's a lot of inflation data out when the meeting's live. So I would suggest that if, for whatever reason, that that data on inflation comes in very poorly, that would give the Fed an opportunity to delay that rate rise. So I do still think there's a risk in that, even though the markets don't agree with me there. Obviously, we'll see how that plays out. Other things that always we've been watching on the non-farm is the average hourly earnings. That's important. That's perceived as when the demand for people is great and the supply of potential employees is lower. That will drive average earnings. In addition, obviously, that will reduce the unemployment rate. However, the unemployment rate is influenced by people who have been out of the market for employment because they didn't believe there was a realistic prospect of employment. Many of those people are returning to the marketplace after a sustained period being out of the marketplace, so that figure can be slightly misleading. But certainly a combination of those two can also have an effect. But I do think today we're going to be looking at that headline rate, and if we see anything like we had previously earlier in the week on the ADP number, then there's no doubt that the rate rise is potentially on, and we will see. We expect to see a still more bullish dollar. Okay, dollar index chart. Well, we can see we've been in this channel to the long side for quite a while now. We've got a significant level through here at about 102. Good data there, should break us above there, and really should be the signal that we're going to get an ongoing picture of dollar strength. Obviously, we would need the rate rise to pan out for that to happen. If it wasn't, then if it didn't for whatever reason, then we would clearly see a move back to the downside, potentially below this level. A good indication of where the market is seeing the dollar, bearing in mind that the dollar interest index is very heavily biased towards the euro, which, as I'll show you in a moment, had a relatively strong day based on the optimistic comments from the ECB. The yen against the dollar had weakened significantly overnight, and when this slide was still weakening significantly into the European Open. Interesting correlation here. We always look at to correlate the Nikkei Japanese stock exchange with the yen pair. We can see we're clearly at this level that we've been watching at the top of this box range at 19,600 now. We'd expect today's figures to weaken the yen, effectively making Japanese exports more competitive, and we'd expect to see a break above that 19,600 level, and we'll be looking for a pullback to take trades long in this market in correlation with the yen early next week. Here is the euro, and as you can see, we had a bullish day yesterday. We had a bullish sentiment right through the meeting. We got through to the high of the day in the press conference. Price then pulled back, but we've seen so far, when this slide was taken, we're bullish so far today based on that ECB comment. I do believe that if we get the data that's expected on NFP, we will see this coming to the downside. But at this moment in time, it probably isn't the best market to be trading into next week. because there is a little bit more strength in that market than we'll see in the pound, the Aussie or the Kiwi, which we'll look at charts in a moment. Here is the pound. We're at a significant level at the moment. We've been bearish all week. We've got a level through here. This is a significant long-term channel. Draw that on your chart and see where it anchors up previously to the top of the current monthly bearish move, and we've been above this. We've effectively got a parallel trend channel above that. We look to be testing that channel in conjunction with this level today. We do have the potential of a lot of dollar strength, pushing the pound below and back into this original channel here, which is effectively the channel that price took immediately or post the Brexit vote, but then it broke out of that channel and has been a little bit more bullish at times, but clearly we can see that's not the case here. We've got the government being beaten in the House of Lords with amendments being made to the Brexit vote, to the Brexit bill. Certainly, almost certainly, that is really only going to work as a delaying tactic at this moment in time. But at this moment in time, very little positive to look at on the pound side. So we would expect that to fall against into dollar strength on those good numbers today. On the Aussie, well, last week, I think it was Thursday last week, the Aussie capitulated. It had been probably at that point the strongest currency against the US dollar. All of a sudden, the buyers disappeared, price plummeted, and we've seen another strong move down Wednesday of this week, follow through. We've now got a bit of reaction. We're clearly in that channel down there. We've been in this trade right since the top there, so it's a very nice trade. We've had initial profits off the table. We've got further profits locked in here. We haven't yet found an end of day entry to get back into this trade. We have been taking intraday trades on the way down profitably, and we will go into next week looking for daily levels that we can look to add into this trade on the basis of the good non-farm figures and the impending rate rise, and targeting now. We were originally targeted about a 0.75, but bearing in mind what's happened this week, we're looking at targets of 0.74 and even the bottom December lows down here if we see that dollar strength. So plenty more potential there. As I've said, we are making money intraday. We're looking for opportunities on longer term trades. They haven't materialized, not a problem. We're already in the trade, we're making good money, and we're not looking to give any of our profits back by being over aggressive getting into the markets. So we always wait for markets to pull back to significant levels before we try to get back into the trend on that basis. One of the cross pairs that we've been trading successfully over the last couple of weeks on that Aussie weakness is EURUSD. We got in here right down at the bottom. Opportunities to add in at this point here, either longer term on this low test pin bar here, or obviously intraday through there. So that's been a very successful trade for us. Bearing in mind what I've said about the ECB meeting yesterday, there is potential for this market to continue to move, and our targets will be to the top of the channel here on that particular chart. Kiwi, bit disappointing for us. We were in at this level up here, but we got spiked out, having taken our first profits off the table, stops at break even. We were spiked out there, and as with the Aussie, this market has fallen relative to the dollar the fastest. It hasn't given us a clean end of day opportunity to get into this market. You can see we've got an order in at this moment in time at around 69.50 in conjunction with this trend line and a nice level through here. That will stay on my chart till about 11 o'clock this morning. I don't expect anything to happen in that period, and then I've got a window before non-farm I know exactly what will happen. Price will scoot up there, and then the dollar strength will push it down. But there's still too much risk in that for me. My rules are I don't trade non-farm payroll. I have no pending orders going into non-farm. So that will be off the screen at that point, and we'll be looking to allow the markets to absorb the figures today, and then look for them to play out the early part of next week, and look for a nice, very high probability opportunity to get into this market. We're having a great week in other areas. Your bias then should be not to try to jump into trades, not to get overexcited, to stick to your rules and those very high probability entries, because in trying to get into other markets, obviously if we fail and we lose, we're effectively just handing back profits we're making elsewhere. The other market that we've been making profits in strongly this week is silver. All the precious metals are bearish at this moment in time. We're looking for opportunities in gold. Looks like an opportunity might be arising in palladium as well. Platinum is moving down against its seasonal. It's seasonal for this month, or for February stroke beginning of March, should I say. So again, I'm looking for an opportunity to get back into this trade at a high probability, a safe level through here. Again, this pending order will be clear of this chart before non-farm. We'll be waiting for it to play out, and we'll be looking for opportunities again to the short side on this, unless those figures shock and come out really negative or something like that. But again, we'll let the markets absorb the data, react to it, and then when the market's more settled, the early part of next week, we'll look to take advantage of what's there. Okay guys, so a big day ahead. Certainly going into next week with this non-farm, and then the FOMC meeting Tuesday, Wednesday next week. This could be the beginning of our major setup for the remainder of the year, which is dollar strength based on central bank divergence, the Fed raising and looking to raise rates further. Virtually every other economy, if not actually now looking to reduce rates, certainly easing strongly, and not currently looking at pulling back on that easing. So we will have significant divergence, and hopefully that will play out and give us some nice movement and trends that we can take some opportunity and make lots of pips out of. Reminder, this is coming up fast now. Next free training event in London on Wednesday the 15th of March. Totally free chance to trade alongside the Phoenix Blue Fund managers. If you're interested, click the link that will appear in a moment. That'll take you to the website. Contact us and we'll send you all the joining instructions for that. Sooner rather than later, obviously, because that's coming up. Very short notice now. On March the 11th, which is tomorrow, we're in Stockholm for an all-day event that's absolutely free. If that's something that you're in a position to attend or are interested in, I suggest you act immediately. I won't promise that you'll actually get through there, but the earlier today you try and do that, we'll try and get you included in that event in Stockholm tomorrow, Saturday. Okay guys, so caution today, follow your rules. Let's hope we get some nice numbers out that are going to give us or allow our plan for the year to play out, allow for the rate rise next week. It's been a great week. Let's not give away our money, our profits. Have a great weekend, and we'll speak to you again on Monday. Thank you.